Hello guys, Bitresponder here. Happy New Year, and I hope you the best of luck this year in 2022 for your cryptocurrency portfolio and everything that all your New Year's resolution. And today we're going to talk about the state of the cryptocurrency market, where it's headed in 2022, and we're going to continue the series of market reviews. We talked in the last two videos about warnings for 2022 in case a bear market is going to begin based on fundamentals, utility, on-chain analysis, other external factors that affect the cryptocurrency market. So today we're going to look at several factors, new things that came out, new reports, new information, and of course, in conclusion, at the end of the video, I'm going to talk about what my investing status in the cryptocurrency market is, what are my opinions for 2022. Of course, no price predictions, we're not childish. No one can tell you a price at the end of the year. You know, this is the mistake that a lot of cryptocurrency investors make, and even top-notch people in the cryptocurrency market, where they tell you at the end of the year Bitcoin is going to be 200,000. Well, they show you an evidence, or they just say that based on optimistic opinion, but no one can really predict the price. At best, it's mostly just quantifying a bull market or a bearish market case. So the first thing we're going to look at is this article from Cointelegraph, where they talked about BTC not reaching 100k target, but what about 2022? The first thing that I looked at from the state of the article, firstly, I always skim the article, see for any general biases, information, anything that can give me off. And when I looked at the status of the person that wrote the article, they're a full-time technical analyst and trading, so it can really tell about their opinion when it comes to writing articles. And the first thing they talked about is the United States Federal Reserve monetary policy, and that they're going to wind down its bond buying program at a faster pace. It's also projected 3 interest rate hikes in 2022, and somehow they're relating that to Bitcoin, because Bitcoin at some stages there was a strong correlation to the S&P 500. So even at the end, they just tell you it's difficult to predict with certainty whether investors will continue to buy Bitcoin as a hedge against their portfolio, rising inflation, if risk of sentiment will result in profit booking. So essentially what they're trying to say is that there's no correlation. You can't really predict. And then they start talking about the historical performance of Bitcoin back in 2017 and the bull market and how it was at euphoric levels and why it pulled back. But the thing is that this does not take into account, and this is why I hate technical analysis in general, is because on-chain analysis is firstly more predictable / more, it's something that can be depended on, but also that technical analysis is not very accurate and historically did not really perform well. So I really highly disregard technical analysis when it comes to forming opinions on whether a bull market continues or a bear market is forming, and generally stuff like that. So I did not really continue the article, and I don't like to cover stuff that have to do with technical analysis. Now, the week on-chain analysis from Glassnode report, this was week 52 of 2021. And the main important points that I found out is that prices are up 78.5% from the 1st of January 2021, the current price relative to the beginning of the year. Exchange balances saw a net yearly outflow of 67.8 thousand Bitcoin, a decline of just 2.5%, which is much less compared to 2020. Okay, mining hash rate has finished 2021 up 27% on the year. If you remember, in the middle of the year of Q2, we had the Chinese ban on cryptocurrency mining. The mining hash rate fell off by half overnight. So it's great to see that all this mining hash rate has migrated so that the transactions can continue and the blockchain stays secure. So there has been a lot of noticeable redistribution in coin supply from short-term holders to long-term holders. Now, one thing to take into account is that what constitutes a short-term holder and a long-term holder? Someone who held Bitcoin or cryptocurrencies in general more than 177 days. So that's for a long-term holder. If you're a short-term holder, less than 177 days. So long-term holders added 1.846 million Bitcoin to their holdings, bringing their total stack of 13.33 million Bitcoins. This reflects an increase of 16 over the year percent, of course. Now, one thing I want to say in general is that long-term holders, some people might think it's in years, but since Glassnode considers a long-term holder as 177 days, I think it can be a bit deceiving, because one can think that, oh yeah, these long-term holders who have been holding Bitcoin for years, but no, it's just within less than a year, so half a year prior. So sovereign supply, defined as all coins held outside exchange reserves, is currently at an all-time high of 13.34 million Bitcoin. So this considers short-term and long-term holders. Now, one thing is for certain, that exchanges over time, the number of Bitcoins that they've had decreased, and this happened mainly in 2019 and 2020 due to institutional investors entering the cryptocurrency market. And currently, all the reports throughout 2021 have showed that exchanges do not have enough Bitcoin for most investors or traders. I even personally, last time I bought cryptocurrencies, and we're going to come to this in the end, they've delayed allowing me the ability to withdraw my cryptocurrencies. So I could not withdraw my cryptocurrencies only after 2 weeks from buying the cryptocurrency, showing that there's not a lot of liquidity. So most of the cryptocurrencies are held in cold storage wallets, not on exchanges. This modest transfer of wealth from short-term holders to long-term holders, despite multiple price all-time highs, suggests that 2021 is best described as a macro consolidation and a period of modest accumulation. And we have covered this in the past 2 videos. All the reports keep repeating this fact that there has been a lot of accumulation. Long-term holders have increased their stake in Bitcoin, so we're not going to keep repeating the same point. And as we talked about exchange reserves, and here's another thing that is very important, and you have to watch this out for the Q1 of 2022. There's going to be a lot of volatility. Total open interest in futures has almost doubled this year. This week alone has seen an increase of some $2.5 billion in open interest, primarily led by traders on Binance. Now, the problem with this, when you have a lot of open interest, and of course it's not like the all-time high, so a few months ago it was much higher, which we saw, if you remember, a short squeeze, and the Bitcoin price skyrocketed on Binance. And there were many liquidations. I believe it was like in the billions of dollars. I don't remember exactly what happened, but I remember that billions of dollars got liquidated in an instant. So since there's a lot of open interest, that means if anything happens, if the price, for example, of Bitcoin drops by 2% because people are selling, stop losses and liquidations are triggered, hence the decline could be doubled or tripled, so it could fall more. Now, this could be a long squeeze where that happens. Sometimes it's a short squeeze where the price skyrockets, so it really depends on what future contracts are open at the time. Alongside an elevated possibility of a leverage squeeze, we also have a general decline in trading volume, which is seen also on CoinMarketCap. You have 40 to 50 billion decrease in 24-hour trading volume from last month till right now, the 1st of January 2022. Kraken intelligence. We're going to look at 2 important things that I have noticed. Firstly, the OpenSea statistics are very strong. As you can see, the number of daily users, daily volume, and daily transactions have been increasing since the beginning of 2021, which really signals that this NFT craze might really continue into 2022 and might get worse, because if it gets worse, there's going to be more rug pulls. And look, NFTs it's an amazing technology, right? There's a lot that can be done, but where there's a lot of profits to be made, scammers are there. So expect in 2022 strong regulations against DeFi and NFTs to stop rug pulls and a lot of scams. This happened with ICOs, hence why ICOs don't exist anymore. So I hope NFTs and DeFi remain. However, due to looming regulations, which is inevitable essentially, because there's a lot of trading happening and there's a lot of profits to be taxed by governments, so it's going to be a very interesting factor, and I hope the regulations are not that strict and they're going to limit NFTs. And I also one tip of advice I want to tell people is be careful with NFTs. I've received many spam emails, spam DMs, all types of spam, and a lot of Instagram shilling. There's so many on Instagram posting about NFTs and their profits and how much money they're making. Be aware, it's not that easy to make money with NFTs. Yes, you can make money, but you have to be careful with who you invest and what you're buying. So Another thing that I've noticed from Kraken Intelligence, again, whales, especially for Bitcoin, you can ignore Ethereum. I don't really consider Ethereum that important when it comes to analyzing the state of cryptocurrency market. Of course, we always try to focus on Bitcoin because the data on Bitcoin is much bigger, so everything can be much more predictable. Anyways, for Bitcoin, so the general increase in institutional investment and whale wallets is evident. Don't consider any of these short-term, oscillations in the amount of Bitcoin held. The most important thing is that over 2021, the amount of Bitcoin held by whale wallets has increased. As you know, also at the end of this month, MicroStrategy has purchased an additional 1,914 Bitcoins for $94.2 million in cash, $49,000 per Bitcoin. So the average price they bought at is $30,159 per Bitcoin. Also, that El Salvador at the beginning of December bought 150 coins at an average price of 48K. Grayscale, if you remember, we talked about them in the last video in market reviews. Now, if you look in 2020, and this is very interesting, they've increased the amount of Bitcoin that they're holding so much, nearly by double, from nearly 300,000 Bitcoin-ish to 650,000 Bitcoins. But then, along the whole year of 2021, despite all the regulation and the price oscillations and all the things and all the drama and all the stuff that happened in 2021, they kept selling 200 Bitcoins on average every single day, which is, to me, signals something. I mean, they did not continue buying into Bitcoin, and that did not really affect the price of GBTC, which from the Grayscale Bitcoin Trust. Of course, it's more correlated with the price of Bitcoin, but more importantly, they have not increased their stake in Bitcoin. They have been selling consistently 200 Bitcoins. And of course, it's not comparable when you're talking about 650,000 Bitcoins in holdings. But why would you sell 200 to 400 Bitcoins on average daily for a whole year? And how will this affect in 2022? Will they increase their stake again, or will they sell more? So, here we're going to look at the final thing, and we're going to talk about institutional investors. One second. So institutional investors. So as you can see, the number of public companies that are holding Bitcoin, they're 27 based on CoinGecko. I'm not sure if there are any other institutional investors, but these are the main ones. So you have MicroStrategy, Tesla, Galaxy Digital Holdings, Square Inc., and the rest. So here we come to the conclusion of the video, and this is very important for you to understand. There's a lot of uncertainty in the cryptocurrency market and among cryptocurrency YouTubers. Some of them are just, talking on hopium. They're telling you that Bitcoin is going to perform super well in 2022 without providing much of evidence. Now, it's going to perform super well if it's super great news just comes out of nowhere and Bitcoin just skyrockets something like 1,000, 2,000%. Depends on what news comes out. What if government regulation comes in and tells you the EU accepts Bitcoin as legal tender or something like that, or China for the millionth time removes the ban on Bitcoin or something like that. So it really depends what news comes out. That's why there's a lot of uncertainty. So don't buy into the idea that the bull market will continue. There are huge percentage chances that Bitcoin can crash in 2022. Don't believe everything that is being told, right? So it's not all positive and all going up. Anyways, so institutional investors, they have entered the cryptocurrency market in 2019 and now we are in 2022, right? They have bought Bitcoin at very minimal prices. I remember when the price was only 3,500, between 3,500 and 5,000, there was a lot of reports. The Andaman Capital report came out and told us that there's a lot of institutional investors buying, that there is a huge bull market coming, which was true. It went from $3,500 all the way up to 69K. Now, most important thing, institutional investors, this is the first time they enter the cryptocurrency market. What does that mean? That means they're unpredictable. We do not know when they're going to create the next move, because even the list right here, right? Because let's be honest and let's be open and upfront, most people think institutional investors are who? Elon Musk, Michael Saylor, right? Because they're the two major companies that are holding most of the Bitcoin. But what if tomorrow Square Inc. comes and says, okay, we're going to sell half of the Bitcoin holdings, mainly because our investors, based on our investor opinions, or based on some decision, or we want to expand the company, or no, Voyager Digital came to sell their Bitcoin holdings. So because we have 27 companies, it's unpredictable when any of these companies are going to take profits and are going to realize those profits. And is it going to be consecutive? So are most of these institutions will do it together and create a catastrophe for the cryptocurrency market, or is it going to be every individual by themselves? Now, in my opinion, I believe that most of the profit taking, if it's going to happen, is going to happen by April of 2022, so when tax comes around. So some of them might try to book profits in the cryptocurrency market and exit the cryptocurrency market, which can be catastrophic. Like even a sell-off of a couple thousand Bitcoins can move the price by 10 to 20%. So it's going to be a very interesting thing to see how these institutional investors. So this is the thing. Institutional investors are unpredictable. Nobody knows, not me, not you, not any cryptocurrency YouTuber or washed up analyst or any company on the planet knows if these cryptocurrency institutional investors are going to create a sell-off or they're going to hold for the long term. We just don't know. So hence, this comes to my next point. Recently, after the cryptocurrency price crashes, I've begun reinvesting my profits. If you knew my story, if you watched the last two videos, I've sold most of my stake back in May when the prices were very high and I've made more than 28x rate of returns, and I was content with that. So now I have re-entered the market and I found a fine balance of 8%. So I've entered, bought some cryptocurrencies, Bitcoin, Ethereum, and 3 other altcoins, 8% stake. And I found this is a perfect compromise for my situation, for my life circumstances. And this is the thing, each person's circumstances are different. Each person's portfolio is going to be different. So I suggest that you sit with yourself and start learning risk management. So I found this is a perfect compromise between risk to reward and new danger of a bear market. Because look at it this way. If I bought Bitcoin right now, the highest chance, if it's going to continue into the bull market, we're going to reach something north of 100k, right? If we're going to be highly optimistic, maybe 150k if we're going euphoric, right? So that's what, 3x rate of returns on average ish, something like that. Now, either that or going into a bear market losing something like 70-80% of the value that you have in Bitcoin. Now, this depends when you got in. For example, someone who bought Bitcoin at 6k, and Bitcoin retraced back to 12k, and we're just giving hypothetical examples. We don't know if a person will sell off at that point, right? Because of the emotional pressure and psychological pressure. Will they even have the ability to buy more dips, right? So even if they did not sell, can they buy more dips? And hence why I found it for my situation the best is 8%, because if the bull market continued, I'm in profit. I can increase the number of Bitcoins I have, I can increase my portfolio size, and if it crashed, I could buy more, right? Because it's 8%, it's not that much. So it's a very, very fine compromise for my situation. I've created a win-win situation. Back in 2018, if you knew my story, I've been buying into cryptocurrencies since the end of 2017. There was a lot of mistakes that have been done with my investings, hence why this time around I want to be more careful, more strategic, and I don't want to just follow the herd mentality where, oh yeah, everything is going to pump and we're going to reach 200k, because that's exactly what happened in 2017. People said in 2018 that it's going to go to 100k, it's an open way, no one talked about technical analysis at that point. Right? It's funny how, for example, look at this Cointelegraph article. They're talking about technical analysis. Go back to the articles in 2017 and the YouTube videos in 2017. All filler, deception, lies, deceit, all keywords that are connected to negativity. You can just relate to that. So I'm a very realistic person, I'm a realist, and I hope the cryptocurrency bull market continues, but we have to be realistic, we have to be cautious, we have to be risk managers, so that we come out on top in the cryptocurrency market. We make the most out of what is given to us. So thank you guys for watching this cryptocurrency market review. Let me know your opinion in the cryptocurrency market. And of course, I'm not trying to FUD or FOMO, just as a note. And Happy New Year's, and see you guys on the next cryptocurrency video.